We should be live by now. Yeah, but 4 seconds live. All right, so good day guys. Once again, good day guys. And also those that know me, World Bank speaking, also known as Father Ikorede Samuel. Yeah, today we're going to be looking at the currency pair strategy. Recently we've been using the normal breakout and retests, and and it's been doing a lot of things, playing a lot of games on us. So what happened was, when you are using retail strategies like breakout and retests, trend line, Fibonacci, this, that, those strategies out there, you see those strategies out there, those strategies on YouTube, those strategies on Instagram, those strategies everywhere. They are there to blow your account. What I say, those strategies are there to blow your account. Now, the best strategy to use is actually institutional strategies, which is going to be the market maker strategy, where you'll be entering at exactly the price the market makers are ready to move. Where you'll be entering exactly at the price that the market makers are ready to move, and then okay, this is a real entry, not the normal breakout and retest that you always say. Breakouts, retests, wait for engulfing candle, wait for all sort of confirmation like that. It actually works, but it will work sometimes and it won't work sometimes. It will work sometimes, and you'll be like, what's going on? So today I'm going to be showing you something different, which is known as the order block. Some know about it, and some don't. Some, this will be their first time of hearing it, and some, they've been used to it. Even recently someone asked a question about imbalance, but I ignored it, and I asked the person to tell me where he got the information from, but the person didn't do that. So let's go straight to the matter. Now, there's something we call order block, institutional order blocks. What are institutional order blocks? Institutional order blocks are levels that are created by the banks before they signify, or before they move in a big way, before they move an impulsive move. Order blocks are created before the market makers move an impulsive move. So how do we get an order block? How do we see an order block? How to be sure if this thing is still recording? Okay, how do we see an order block? All you just need to do is to look for a very strong impulsive move. And then the last candle before the impulsive move is the order block. So for example, we have an order block here. So the last, can you see the last red candle before this upward move is the order block? This is it here, daily order block. This is the daily order block. Now once you go to the 4-hour time frame, you see that order block broke structures, something like this. We had a breakout here, we had a breakout also here. Then you know that, okay, yes, that is an institutional order block. There's an order block, there's a daily order block at this point, because markets went very bullish to the upside, giving us break of structures. This is a break of structure here, because as you can see, markets broke this previous lower high, lower low, then broke it up. This is a previous lower high, so that was broken. So when you see an order block, you should see break of structures. The break of structure is what is going to tell you that this order block is valid. I hope I'm communicating. Don't worry, it might sound a little bit difficult, or it might sound a little bit different, because you are hearing it for the first time, so just try to get used to it. So what did I say order blocks are? Order blocks are orders or candles that are created before an impulsive move to the upside. Now let's check this one. Just look for impulsive move to the upside or impulsive move to the downside. Then the last candle before that impulsive move is the order block. So let's look for order blocks here. there's another block here. Now this is the last. Can you see the red candle before the impulsive move is the order block? So after this impulsive move, you need a break of structure to confirm that this order block is valid. So from here you can see a break of structure here. This is a break of structure. Can you see there's a breakout here? So then this order block is a valid order block. Whenever you see a break of structure, then you know that that order block is valid. Can you see the impulsive move up, then created order block first, impulsive move up, then impulsive move down? So look at this impulsive move down. There's an order block here. That's the last green candle before the impulsive move down. That's the order block. So let's check. Sorry, I'm moving too fast, but just since I'm recording, so you can just watch and rewatch. For those joining again, I might not, I might not repeat myself, but just try to stay tuned. Just try to stay tuned because it's a very long session. Now this is an institutional order block here also, because before you find another block, before you say this is another block, you must look for aggressive move down or aggressive move up. Let me delete these horizontal lines. Yeah, so you can see this move up, broke structure here, then the other block is valid. Now look at these downward movements. Where is the other block? The other block is the green candle before the downward movement. That is the other block. The green candle before the movement is the other block. Now let's check a look. Okay, how do you know this is another block? Where is the structure is broke? There is lower low here, broke it. There's a structure here. You can see a form of support. It's not compulsory you see clear support and resistance. This is a break of structure here. You can see a nice move to the downside. So this is the other block that started. This is where the move started from, then move to the downside. So how do we enter with other blocks? Let me still make more examples. So move to the downside again, and this is another block here also, green candle before the downside. Can you see break of structure here, then other block created at this point. Where is another block again? You can see a break of structure here. You can see a break of structure here. You can see a break of structure at this point. There's a breakout. So there's an impulsive move, there's a breakout. So right before the impulsive move, the last green candle before the impulsive move is the other block. Now you can look at this one too. This creates bullish candle, but this is too big. It's too big, so I won't take this as another block, even though it's broke structure. But I won't be taking this as another block, because when you want to enter, you'll be entering with wide stop loss, and the essence of this other block is to enter with at least 5 pips stop loss, 10 pips stop loss. That's the goal, that's the aim, because we are institutional traders. We believe that we are entering immediately the market makers are entering. We are entering immediately the market makers are entering. So let's look for more. Let's look for more other blocks. I'm trying to look for the ones that are not visible, the invisible break of structures that you might not really see. So this is a nice bullish move to the upside, impulsive move to the upside. The last red candle before the bullish move is the other block. So you draw your rectangle, signifying that there's an other block at that point. The last red candle before the bullish move is the other block. So where is the break of structure? The break of structure is right here. Can you see? This is the break of structure. Breakouts. It even retested that structure. So the other block was created here. And more so, there's also another other block below. There are a lot of other blocks. There are a lot of other blocks. Can you see? Can you see? This is another block. This is another other block, because there is a break of structure here also. There's also a break of structure here. Can you see? So guys, that's what we call other blocks. Look for impulsive moves in the markets, then the last reversal candle before the other block, before the impulsive move is the other block. Something like this. You can see this impulsive move to the downside, then you can say that this place is my other block. This place, this green candle, that is the institutional other block. So all you need is just a break of structure. Now I'm going to talk about the entry very soon. Also, this is an order block here soon. You can see a nice order block here. Yes. Yeah, this is an order block because you can see impossible move to the upside. This itself is a break of structure. There's a structure here. I don't have to tell you that this place is a resistance area again. We should have passed that stage. This place is a resistance area. When you move to the lower time frame, you see that this place is a resistance area. That zone is a resistance zone. So when you move to lower time frames, yeah, so there's an order block here. Impulsive move to the upside, break of structure, order block, institutional order block. So see, I've been talking about order blocks and I'm trying to give you examples so that you'll be able to get the explanations of the order block. So can you see that we've not used any trend line, we've not used anything. Now once we see an order block, we should be expecting what? A retest of the order block. So the retest is called mitigation of the order block, mitigation of an order block. So let's start with the first order block we drew. We found out break of structure here, we found out another break of structure here until this place, giving us equal highs, signifying a downtrend, presence of a downtrend at this point. Now this is the first order block I used as an example. Then I'll be going back to show you more examples of the other blocks. Now if you have seen an order block and you want to enter these markets, let's say you've seen a lot of other blocks, you've seen an order block and you want to enter. How do you enter another block? Because we're looking for sniper entries. Now this is the entry. Remember I said retest is called mitigation of the order block. So once you find out your order block, the only area you can enter, we have 3 entries. Now I said the last candle before the bullish move, the last red candle, you can see the last red candle before the bullish move is the order block, and the last green candle before the bearish move is the other block. Now this is the red candle. Can you see? That's the red candle. You draw a zone out of that place that okay, that candle is the other block, that zone is the other block. Now when you want to enter, there are 3 ways to enter. Is either you set a pending order here, buy limit pending order. Can you see at this point? Can you see immediately it mitigated that order block? It spiked up immediately, back to this previous order block. Then this one to spike down again. Now that's the first entry. You set a pending order back to the opening of the candle. Can you see? Back to the opening of the candle. Then let's check. You will see that we don't even have up to 5 pips SL. Let's say the entry is here. We've set our pending order there. Can you see? So with this strategy you catch a lot of pips, a lot of pips. Now let's check. Max, I use 10 pips SL, just 10 pips SL, like that. So can you see immediately it mitigated the order block? You set a buy pending order to the what? To the opening of the other block, then you enter. Now secondly is, now we are using institutional strategy. Here. Now what do institutions do? They move in round numbers. Look at these numbers here. 1.79000, 1.79500, 1.78000, 1.810. Can you see those all numbers? They are very, very important. So it means when the institution want to move, they move at a old price. For example, when you want to buy goods in the market, you buy goods at wholesale price, right? So you get it. So whatever you are doing, you are buying at a wholesale price. When you go to a bigger market, let's say you are going to a very big market, for example, whatever you are going to buy it at what? Wholesale price. Then you sell at retail price. And so that's what these banks do here. This is what they do. They move at old prices. Now let's say the entry is here, the opening, because the entry, I'll be teaching you what I use. I use the entry based on the opening of the previous red candle before the bullish move. So I set my pending order on this opening of the bearish candle, then what do? I change it to a round number entry price 1.77885. I'll now change it to 1.77890. Can you see? So that's a more conservative entry. Because you are entering at a low price. Whereby once the market makers move, they move at once. They move at once. So that's what an order block is all about. Just wait for it to get mitigated and enter. That's the first entry. So let me explain the first entry here again. Can you see? This is another block also. You can see a bearish downtrend and break of structure here. Now this is the impulsive move that caused the break of structure. Where is the green candle? The up candle is the order block. The up candle is what? The order block. So can you see? You set a pending order back as a sell pending order at this point. Set a pending order back. Now let's check here to the entry. Now we're using 4 hours. Remember, this is still 4 hours time frame. I'm still going to teach you how to enter on 5 minutes time frame. So I'm using very small stop loss. I mean very, very small stop losses, whereby your stop losses won't even get it. But this is still a 4 hour time frame, and you can even still see 15 pips SL, even on the 4 hour time frame. Now imagine going down to the 5 minutes time frame. All right, so this is the mitigation of the order block. I'll set my pending order right on the opening of the candle that caused the order block, which is the green candle. That is the order block. Then what do? I'll just round my number up again. This is 1.80563. I'll just change it to 570, and then I'm good. That's a wholesale price. Can you see? Like sniper entry. You don't need support and resistance. At all. So can you see the moves? Move to the downside. Now this one has created a support area already. We are going to look at liquidity very soon, but I'm still teaching you the basics of order blocks. Now you can see this move to the upside. There's a break of structure here. Now I believe you guys are still following me. I believe you are still with me. There's a break of structure here. What is the impulsive move? This is the impulsive move. And what is the other block? So the other block is the red candle that formed before the impulsive move. Can you see? Not just an impulsive move, but an impulsive move that broke structure. Impulsive move that is breaking previous highs, and an impulsive move that is breaking previous lows. So that's what we need. That's the target. Okay, so now this is the bearish candle that formed before the impulsive move. So that's our order block. So what are we going to do? We're just going to set a pending order, buy pending order exactly on this price. Can you see? And then okay, at this point this one was going to hit our SL because we're not using the conservative entry enough. Let's say we set our pending order here. The stop loss will be below the zone though. Let's check. Then to the next area of your choice. Can you see? 1:9, 264 pips. Very crazy. Now can you see this one didn't trigger immediately? It first came down and then moved up. Now I'm going to be showing you how to enter on 5 minutes time frame so that you won't be getting stopped out unnecessarily and the market will move in your favor. So let's take check for more order blocks. I just want to show you how market is mitigating stroke retesting. Okay, guys, give me 5 minutes. I need to charge right now. Just give me 5 minutes. I'm coming. Alright guys, I'm back. I believe the network has not gone. Yeah. Okay, so I'm back now. So let's check more other blocks. So this is another block also. Last red candle, set pending order, then boom, massive move to the upside. So that's the first entry. The first entry is the instant pending order exactly on the opening of the previous candle. Okay, let's still check for more other blocks that I drew. Really today I didn't see any trade, and I didn't see any trade, but one of my mentors entered a trade. He entered a trade on AUDNZD. Normally I don't trade AUDNZD, so I think that was a go for me. That was a no for me rather. So what I'm waiting for now, okay, let me explain the other block now. Okay, let me draw my tools the way I drew it. I'll just explain with this tool. So this is the entry here, so we don't miss it. Yes, so now entering other blocks on 5 minute time frame with lower time frame other blocks. That's what I want to explain now. That's why I'm recording. I want you guys to watch this video and rewatch. So okay, I can see a question coming up. Question is coming up. Please, can you the other block, sir? Because I didn't. Okay, like I should come again. Sorry. Don't worry, I'm recording. Just stay tuned. So this is the first entry. That's the first way to enter. The second way to enter, which I use, is the 5 minutes time frame. You know, you use smaller time frame so that you get what you want, which is the tight stop loss. So where is the zone? Where is the zone? Sorry about that. Okay, so this is where it mitigated the other block on the 5 minutes time frame. So what do we need to do on the 5 minutes time frame? All you need to do on the 5 minute time frame is just to look for another block. Look for a break of structure, and then you are fine. And then kill the markets. So where is another block here on this 5 minutes time frame? Where is another block here on this 5 minutes time frame? Because this is the point where it's mitigated. So you can see here we have a nice bullish push to the upside, kind of a break of structure here, a break of structure here also. Nothing much at this point. Okay, this is a break of structure here. There's another block here. Now this is a break of structure. Just take a look at this bullish candle. That's an impulsive move, and what it broke this structure. This structure alone is a previous high. Lower low, lower high, lower low, lower high. So this place is a previous high. is a what? Is a previous high. It's a previous high. So that's the break of structure we add there. And what are you going to do? Then you are going to set your pending order on what? On the last candle before the order block. Just the same thing you are doing on the 4 hours. Once the market is about to mitigate your order block, do the same thing on 5 minutes. Look for order block on 5 minutes and enter. No, so you can see now. This is the crazy entry. So this is the entry here. This is the break of structure, impulsive move, last down candle, last red candle before the impulsive move, set a pending order on top. Can you see? This is it here. So this is the entry. Then you round it up to the nearest whole number. Never forget, because this is an institutional strategy. So you round it up to the nearest whole number. Let's check. Let's try to round it up. Texts, coordinates, style, price, no, cancel. Sorry, this is what I need. Yes, entry price 560. So it's moved up a little bit. So can you see? Nice order block, break of structure. This is the structure here, break of structure, impulsive move to the upside. And this is the order block that caused the break of structure and the impulsive move. Then you set your pending order back to the points, enter with what? The institutional levels, and then boom. So how many pips SL? How many pips SL? Let's check. So can you see the crazy move to the upside? Crazy move to the upside. So can you see just 7 pips on a GBP pair? 7 pips to get that's 1:35 to get how many pips? Let's check it well. 7 pips to get 255 pips. Can you see? 1:35. So that's the way we get these sniper entries. These sniper entries you see is not film trick. It's not what? It's not film trick. So let me show you another order block that happened today, which I missed. AUD NZD. I don't trade the pair, but I saw it, and you know, it was milked. It was milked. Let's go. AUD NZD. I'm still talking about order block alone. We've not even moved to. So you can look for order blocks on 1 hour time frame, 4 hour time frame, and daily time frame. Hey, what's this spike? I don't like this broker. There's no spike on the MT4. AUD NZD. Let's use FXCM. Aha, this is what I want. This is what I'm looking for. So now, you know, there are a lot of other blocks in this market. You say, okay, this is another block, this is another block, this is another block, this is another block, this is another other block. How do I enter the real other blocks? Now, remember something. Markets will sell at the highest points. The market makers will sell at the highest points. So any other block that you can see at the highest points is a valid order block. Or any other block that you want to enter and does not give you 5 minutes order block confirmation, then you exit the order block. So those are 2 ways to know that this order block is not going to work or this order block is going to work. Now if you see another block here and you see another block here, just know that this order block is going to work. This one here is going to work because the market makers will sell at a lower price. They will sell at a lower price. They won't sell at this price here because this price here 1.71551 is higher than 1.7325. So they will come and sell at 1.07325 and then they move like that. So that's one way to know that, okay, if I see other block here, if I see other block here, if I see other, just select the one that the market makers will move, which is the one at the highest price or the one at the lowest price. That's how to identify an order block that will work or not. Because if you say you should keep checking these markets, you see millions of other blocks. Millions. This is another block here. Can you see? This is a nice order block here. This is an imbalance that was caused by news. Nice imbalance. Market will try to fill the imbalance and then sell back if it sees an order block. So this is an imbalance order block. Can you see? It mitigated it, came down a little bit, started going to the upside. So this is AUDSZD. Can you see? Move to the downside. Impulsive move to the downside. Impulsive move to the downside. Break of structure here. Another break of structure here. Break of structure here. Break of structure here. Yeah, this one. There's a break of structure here also. So can you see? There's a lot of break of structure. So after seeing the lot of break of structure, that's an with this impulsive move. This is also an imbalance. This is a news. You should have known that this is a news. A move up, then a move down. Aggressive move down is a news. It's an imbalance. Imbalance is caused by lots of orders by the banks. You know, opening orders. So it causes imbalance. It's actually due to news. So this is the aggressive move up, aggressive move down. So once you see aggressive moves, just targets the candle before the aggressive move. So this is a bearish aggressive move. So you look for the green candle before the aggressive move. Can you see? This is the green candle before the aggressive move. Can you see? And then that is the other block. Because after the aggressive move broke structures. It broke structures. So that is the other block. So you set your pending order here. That's the first entry, which I don't use. The 5 minutes entry is the one I use, because once I see 5 minutes confirmation, then I'm ready to kill. So if I don't see 5 minutes confirmation, then I'll take it that the other block is not valid. So there are different ways to know if another block will be valid or not. Various ways. First of all, I said if you see a lot of other blocks and you see one at a very high price, just go for the one with high price. Or if you see a lot of other blocks and you check on 5 minutes time frame when the market is mitigating the other block, just go to 5 minute time frame. If you don't see any other block on 5 minutes time frame and break of structure, then forget it. So now here is it here. The mitigation happened here. Let's say the market got to this point and mitigated it. Our TP still way down, at least let's say to this point. Yes, just 48 pips. Let's see how many SL would have used. So the market got to this point, yes, entered the zone. It was mitigating the other block already. Everybody's watching, the institution is waiting. They're trying to mitigate the other block. Where is aggressive move? Where is break of structure? Yes, so as you can see here, there's an aggressive move to the downside. Now there's a break of structure happening. I can see 2 entries. First of all, this green candle, the green candle like that. This is the move to the downside, just this little move to the downside, and it caused the break of structure here. If you can see it very clearly, there's a break of structure here. Let me delete that. There's a break of structure here. There's a break of structure here. Yes, there's a break of structure here. So you have to be very alert. Very alert. There's a break of structure here. This place is a support area. This place is a support area. The market broke it. After the market broke it, what are we looking for? There's a break of structure already. The candle that formed the last bullish candle before what? Before the aggressive move to the downside. But this downside has not happened yet. So we're just looking at it. Okay, we've closed at this point now. The market is here. That's when the market is here now. And this is the last green candle that occurred. Can you see? Before the break of structure, before the impulsive move. Then you're going to set your pending order back on the green candle. Can you see? Set your pending order. Yeah. So you're going to set your pending order back to this opening of the green candle. Can you see? Opening of the green candle. Then market was here, mitigated the 5 minutes order block, and then boom to the downside like that. Remembering to use 8099 to just be 100 like that. Yes, so using institutional entry, boom, to the downside, and then your stop loss will be where? Just a little bit above everything, like that. So market is still moving. Can you see how to enter other blocks? Just 4 pips SL, imagine 4, 1:11, 1:11. Can you see that? So nothing hard at all to get 4 pips SL to get 47 pips. Not bad, not bad at all, at all. If you miss that first move, there's always opportunity. There's always opportunity. So there's another break of structure here. Can you see this mad impulsive move on the 5 minutes candle? Impulsive move on the 5 minutes candle. This red candle. So this is a break of structure already. The red candle broke structure. And where's the candle that formed before the impulsive move? Can you see? The last green candle that formed before the impulsive move is what? Is the order block. So you set your pending order on the opening of the other block. The market will be here at that time. Then you come in with the sniper entry again. So you could have entered 2 times. You could have entered 2 times on this same pair. 070. Nice. And the stop loss would have been above. Again, that would be 2 entries on just one order block on the 4-hour time frame. Imagine, just like that. How many pips SL is this? 3 pips SL. Imagine guys, 3 pips SL. So nothing much on order block. That's the order block for you. Once it mitigates the order block, go down to a smaller time frame, check for other blocks within the zone, within the mitigation zone. Just check for break of structure. You can see impulsive move, break of structure. Set your pending order to the opening of the green candle before the impulsive move, then fire, just like that. So 3 pips SL in this market is not bad. You can see you can even swing. You can see this one now is a swing trade already. Sorry, it's still a day trade though, because you know in few time it will get to take profits. So without trend lines, without Fibonacci, without anything. So that is order block for you guys. Let's go back to the 1 hour where we started from. Remember, we saw everything on the 1 hour time frame. Okay, there's a question. When you said break of structure, do you mean change in trend? No. Break of structure can just be a reasonable breakout from support and resistance, and not the obvious sorry. Okay, let me just delete that. Now this is a break of structure. Okay, let me use this as an example. This is a break of structure. Okay. Yes, there's a break of structure here. Can you see there's a breakout from this previous high? That's a break of structure. And can you see in the process of giving us a break of structure, it was impulsive. Can you see? It was impulsive. So therefore, there's an order block here. Before any impulsive move, you always see other blocks. Before impulsive moves and break of structure, you just go to the lower to the charts. There'll be another block at this point, like that. So the last green candle, the last red candle before this move is the other block, just like this one. Oh, not this one, GBP AUD. So I believe you can understand what we mean by break of structure and other block. So now there's another block here. There's another block here like this. There's another block here. Can you see? Nice move to the upside. There's a break of structure here. You need to just open your eyes when it comes to this break of structure of it. There's a break of structure here like this. Yeah, that's the only break of structure we have until we got to this place giving us equal high. Sign of what? Sign of move to the downside. So at least market should sell back to this other block and buy. Let me delete this one. Let me delete this one. Let me delete this one. Yes, so this is an order block. Once market gets inside this order block, once market tries to mitigate this order block, check 5 minutes time frame, look for another block again, enter, and then kill it once, like that. So that's the way order block works. And then kill it to the upside with 5 pips SL, 3 pips SL, 10 pips SL, you know, crazy SLs. Entering with round of psychological numbers, don't forget. So I'll be stopping on order block now. That's all about order block. Now I want to move to liquidity. Liquidity is very powerful. You know, this is ICT trading. This is ICT, inner circle trading. Inner circle trading. Okay, inner circle trading, whereby you don't really need much. You don't really need those obvious trend lines that will blow your account. This thing is very obvious. The market makers know that people want to sell here. They know that people want to sell here, and you too, you know that you too, you want to sell. So why will you sell when the market maker know you want to sell? Market maker want you to make money, so they'll just buy. And same thing happened, they'll just buy because there are a lot of sellers here. And what has happened? They have grabbed liquidity. What is liquidity? Liquidity is stop loss. Liquidity is stop loss, and stop loss is money. Liquidity is stop loss, and stop loss is money. If you can't find liquidity, you are the liquidity. If you can't find liquidity, you are the liquidity. There's liquidity here. There's liquidity here. Sorry. There's liquidity there. There's liquidity here. There's liquidity here. Because people want to sell. Where is this? I'm trying to make it small. Can you see I'm using the dollar sign because there's a lot of money here. A lot of people want to sell. Then what? They'll take out all the sales. Bram. Eating people stop loss. They make money. So liquidity is money. Liquidity is stop loss. Stop loss is money. As a retail trader now, please try recording. It is moving really too fast. All right, yeah, I'm recording. Yeah, so we're how many minutes up now? 44 minutes. We are 44 minutes up. I'm recording. So recording doesn't mean that you should leave the class, because you know, I need you to ask questions before I stop. Now, what do I mean by liquidity? Liquidity means retailers stop loss. A lot of retailers, is very obvious. Just look at it. You know, I've taught you this thing before. Actually, I've taught you that, okay, once you draw a trend line, is either you sell or wait for a breakout. You know, as a retail trader, you are just guessing. You know, I always teach you, and I'm telling you the truth. I always tell you that whenever there's a trend line, is either it respect the trend line or it's break out the trend line. So it means we are just guessing. We don't even know. We don't know. But as an inner circle trader, whereby you know that there's liquidity here, you will not even waste your money on this place. You will just leave it. Wait for what? Admit. Alright, thanks for joining. Yeah, I'm on liquidity. Where did I stop? So as an inner circle trader, you don't trade the obvious. You can see trend line. Everybody wants to sell. Can you see? Even they sold. They actually sold. Look at this week. They actually sold. Then they went up. You know, in the process of selling, they are creating FOMO, fear of missing out. Everybody that doesn't sell is selling. You are even telling your friends, see guy, AUDNZD has started selling. No, go and join this sale. They started selling. Go and join this sale. Everybody selling. Then at the points, they just went up. Market makers. You'll be like, oh no, what happened? And this thing, I entered the sell, oh, it hits my stop loss, and then it started selling again. They'll hit your stop loss and then go in your direction. They'll take your money and then they'll now go in the direction they actually want, making triple money. They make your money from the stop loss, they make money from the buy, they make money from the sell. So, and we are not here to dash anybody money because it is our hard-earned money. Am I right? Am I communicating, guys? So liquidity is very, very crazy. It happens every day. Now, how do we combine liquidity with pending and with order block? How do we like I said, I don't use trend line. Let's first delete this trend line. Let's delete it. Delete everything. So I just gave an example of how liquidity works, and you can see it's live. Now I killed GBP USD last week. Where you don't tell where I use system. Delete. Where's delete all drawings now? Delete everything. Yeah. So where is GU? Yes. Now let's check what happened on GU. Where is GU last week? Where's my session break, please? Session breaks. Yeah. Session break. Okay. Now this session break is somehow just give me some minutes to create settings for session break symbol. I need appearance. Okay, symbol, color, session break, appearance, session break. Okay, here is the fucking session break. Okay, let's reduce the thickness. Okay, let's use whites. All right. Okay, so we are good. Now this is GU. They created liquidity on GU and I killed it. I killed GU last week Friday. Yes. We are here. Now your normal support and resistance. There was one day I was in a live class with someone. I was telling the person that all this normal support and resistance, the best is to wait for breakouts and retests. I always say it because they manipulate a lot. Even before I knew this this ICT, support and resistance. Now this is support and resistance. I think I was telling one of my where is he here? I was holding a live class with him and I was telling him that I don't sell at resistance and I don't buy at support because it's just too obvious. Even though I was not trading ICT that time, but I know that these market makers are so crazy that they know how to manipulate stuffs like this. Now what has happened here? There's liquidity here already because everybody wants to sell here. Everybody wants to sell. They want to sell. Market maker is watching, smiling. Okay. So there's liquidity there. What do I mean by liquidity? Liquidity is where everybody's stop loss is going to be. So now if you want to sell as a retail trader, what do? You just come here. Make I just sell here for this side and take profit for support. Make I just sell like this. That place, that your stop loss. That your stop loss is their own targets. They'll be man. So that's what they do. The stop loss is their targets. They'll kill everybody and then go in their direction. Then you hear retail traders saying, this thing hits my stop loss and it went my direction. Yes, the market makers, they are ready. It means the market makers are already on your matter. The market makers are on that chart. When you hear someone saying it hits my SL and it went in my direction, it didn't hit his SL. It hits millions of people's SL and went in their direction. Okay. So what do we have here? There's a resistance here, liquidity. Let me use 30 minutes time frame. 30 minutes because it was clear on 30 minutes time frame. And where was it? Okay, it was here. I entered somewhere here. The entry was crazy, man. It was here. So I saw the liquidity at this point, where's even my graph? Okay, I was drawing my resistance zone here. Yes, I was drawing my resistance zone here, and I was drawing my support here. So can you see now from this? Look at it. Sell at support, sell at resistance, sell at resistance, sell at resistance. A lot of sellers are here. Look at what they did. Just look at what they did. They went up. Normally, if you want to enter, where will your SL be? At least your SL will be somewhere here. As a retail trader, at least you want to reach 25 pips SL now. At least 10 pips SL, 15 pips SL. Let's say 15 pips, let's say 20 pips SL. See what they did. Now, mad. Sell at resistance. All of you have sold. Bam, they just came. They entered. They went up. Liquidity grab. They grabbed everybody's money. And they went down. Look at how they did again to the buyers. Man. Retail traders, no. So that's why I have to share this information with you guys that no, nobody's here to dash anybody money. Just look at it. Support, buyer, support. Spike. Bam. Again. Bam. Went in everybody's direction. So they are a very crazy set of people. Now, how do we enter this market? How do we catch liquidity with the market makers? How do we catch liquidity? That's where the work of order block now comes in. I hope you guys are communicate with me. That's where order block comes in. So where is the order block? Moving down to the smaller time frames. No, it wasn't this OB I used. So I think it was this one. Let me check. This other block. Sorry. This other block here. So can you see the sniper entry? It was this other block I used because I saw a massive move to the downside. Impulsive move. Break of structure. A lot of break of structures, man. Move to the downside. Break of structure here, break of structure here, break of structure here, break of structure here, break of structure here. I knew that no, this is the time to enter. So I drew my other block. Now when you want to catch liquidity, you don't need to enter other block on 5 minutes again. Do you understand? Because once they want to grab liquidity, they grab it once and move. So we want to grab liquidity too with other block. So can you see this is the other block. This is the down last buy candle before the impulsive move to the downside, and then we enter towards setting pending order. At that point is even a point of liquidity again. So set your pending order, move it, shift it to a O number. You enter here, take profit at support. Imagine 8 pips SL, just 8 pips SL or 10 pips SL. Now just look. I'm trying to make it show, but that doesn't matter. Yeah, see, just look at the entry. Just look at the entry, guys. Just look at the entry. So sweet, so fucking sweet. Yeah, somewhere there. 1:4. Sweet. ASAP. Now look at what they did. They killed the sellers because they went up, eating everybody's stop loss. They killed those trading breakout and retest because some people are waiting that breakout and retest. The breakout and retest, I taught you. You see the green candle, you buy. You see this green candle that formed, it sold. I believe I'm communicating, guys. So just take a look. They killed sellers, they killed buyers, again. Breakout and retest, they killed them, went up. Now can you see that as wickedness? Just within this zone alone, they killed many people. But we look at just imagine 9 pips stop loss when everybody's complaining that hey, this and that. So that's what I have to tell you guys. That's what I have to teach you guys. Look for liquidity in the markets. Enter above. with order block. Can you see? Nice order block. Nice order block. Aggressive move to the downside. This is the order block that caused the aggressive move. Then boom, just set your pending order on that zone. Can you see? Move it to a round number, and then chill. Just chill, and markets will move in your direction. Institutional order blocks. Now let's check if there's an order block below to catch this buy. You can see there are moves to the upside. You can see nothing much. I can't see any break of structure. Let's go down to the 5 minutes time frame. So that's how to analyze with order blocks. When you want to catch liquidity with order block, don't enter order block again on 5 minutes. Say you want to analyze, just set your pending order straight. Set the pending order straight. But if it's just an order block entry you are seeing, if you are seeing a normal order block, then you should enter with what? 5 minutes entry. Okay, so this is 5 minutes here. I can see a break of structure. Okay, I can see a break of structure. I can see a nice break of structure. So where's the last red candle before the green moves? Where's the last red candle? It is here, but has been mitigated already by this rejection. But let's check. But once you meet the sell, you know, milking the buy again, that's very crazy. So you see a nice move to the upside. This one has mitigated it already. But let's check if this will catch the liquidity for us. Let's just check. Almost. So guys, this strategy is fun. It's fun because you are just moving with the market makers. Can you see this one? This is the line of the OB immediately. So you just set your pending order. Once you see liquidity and order block, you set pending order immediately. But if it is only order block strategy you want to use, then you have to go to the 5 minute time frame to enter and confirm the order block that you are seeing on the bigger time frame. I believe I'm communicating, guys. Now there are some times that you see order block and liquidity together. Now, for example, let me take it back to that 30 minutes. Let's say you are seeing let's say you are seeing an order block. Yes, let's say you are seeing another block somewhere here. You can see that there's liquidity above. Don't even try using the other block here at all, because you can see there's liquidity. Sellers are here. And on that block too, sellers are there. On the other block, sellers are there. So don't even try entering with the other block when there's liquidity. But when there's liquidity and there's other block above the liquidity, man, time to fire. So same thing here too. Once you see another block at this point and there's liquidity below you, man, run. Just look for another order block that is below the liquidity and other block that is above the liquidity, so that you can get your sniper entries. Now look at this GBP USD. Wyckoff, I think Wyckoff is happening here. I'm not going to explain Wyckoff tonight. Wyckoff is very wide and it's kind of complicated. So you can see, okay, this market is telling me that it wants to sell. At least this is the PSY, this is the selling climax, automatic rally, secondary tests, what do we have here again? And this is an uptrust. This is like the sign of weakness, but I've not gotten a lot of sign of weakness. Automatic rally after uptrust after distribution should be somewhere here, so I'm expecting a sell at this point. Then I will use another block here to sell. But I'm not talking about Wyckoff today. Wyckoff is complicated. So I want to know if you have any question. What is the time? This is 9:03. Please, any question on what you don't understand, any question. Then I'll be talking about imbalance lastly. Any question, please? If there is no question, let me know. Just type no question so I can move to imbalance. Any question? Let me know. All these indicators are rubbish. All of them are there to blow your accounts. So any question, please let me know. Any question? This is the strategy I taught you guys on WhatsApp. This is the strategy I taught you guys on WhatsApp. Can you see? Massive move to the downside. For now, none. Okay, I'm still not getting the concept of break of structure. Break of structure. Okay, break of structure means breakouts. Let me just put it that way. Break of structure means breakouts. Something like this. You can see this is a support area here. You can see market moved up. Then what happened here? Breakout. Can you see breakout? So this is a break of structure. This is a break of structure. And then we'll be looking at an order block here, but I don't think other blocks work on volatility index because the banks are not present here. I'm not sure. I've not used it because I'm falling in love with this, my 4-hour strategy. So I don't know if break of structure is working on VIX. So this is break of structure. Once there's a support area, a market breaks it. That's break of structure. There's another break of structure here. Can you see, guys? This is a resistance area. Market broke it to the upside. That's a break of structure. So GBP USD. Let's go to I queued is it Euro NZD on our time frame. Okay, now nice guys. Can you see liquidity here, everybody? Now I believe you guys should be seeing what I'm seeing by now, that all those buyouts of oscillator resistance don't work any longer. So can you see, guys, this is a daily order block, 1 day time frame. Can you see this move to the upside? Bah, this impulsive move. The red candle before that impulsive move is what? The order block. There's a break of structure here. For my uncle that does not understand break of structure, what can I use to look at this resistance here? Yes, can you see how market broke it to the upside? So that's what we call break of structure. And once you see a break of structure, impulsive break of structure, what do I mean by impulsive? Strong break of structure, then there should be an order block, which is the red candle before the buy moves. And if it is a sell to, it will be the green candle before the sell. Just the color. It's the color that matters. So this is a break of structure because there's a resistance here. There's another break of structure here too because there's another resistance here again. So I believe you guys should understand what I mean by break of structure now. Let me break that down. I'm coming. 1 hour. Yes, so can you see? Nice break of structure, nice order block. So what are we waiting for in another block? Buy, right? Pending order. So my pending order is here. I'm still waiting. Pending order is here. Can you see, guys? It didn't give me 5 minutes confirmation. Stop the camera. I can kill you. Can you see, guys? It's the order block, went up immediately. So can you see, after going up, it didn't give me any confirmation at all. But look at this place. There's a liquidity here. Buy. Market sold, breaking all these buy structures, and then it's the order block immediately and then started moving to the upside. Very nice. But I didn't take this one because the risk to reward is very wide using daily time frame. Let's check. Let's say I entered here. My SL will want to be here. 15 pips SL. Imagine, even on daily time frame. Can normal retail trader strategy give you 15 minutes pips on one daily time frame, 1 day time frame? And if we want to enter on 5 minutes, we'll be using like 5 pips. Imagine. So I didn't use this order block because I didn't enter because I was waiting for 5 minutes confirmation. Now let's go to the 4 hours. There's another liquidity again, which I'm anticipating, which market is still respecting. Now everybody is happy. The buyers are happy here because what is happening? There's liquidity happening here. What do I mean by liquidity? Liquidity is stop loss, and stop loss is money. Hey. Yes, you can see my buy is waiting, my buy order is waiting. This is liquidity here. Liquidity is stop loss and stop loss is money. Now everybody's stop loss is here. Everybody's stop loss is here. All the retailers, their stop loss is here. Their stop losses are here. Everybody, all of them are eating. They are eating. They are happy, right? The market is still buying. Market is still buying. So when the market comes down again, they will open another buy order. Those retailers will see what they will open again. They'll say, let's buy again. Let's buy again. So there's liquidity here. Once they start buying, the market wants to accumulate a lot of buyers, then it sells, obeying this order block. This is my order block. Now looking at this smaller time frame, there's another order block on the 1 hour. So I'll be using the order blocks I'm seeing on the smaller time frame till I get to the liquidity grab, to grab liquidity. Now there's another block here. Can you see? This one has been mitigated already, but let's delete that. That's been mitigated already. Now all we need is 5 minutes time frame. Now 5 minutes entry. But since we want to grab liquidity, our stop loss should still be where the other block is. There, like that. So we are waiting for them to grab liquidity. So there's liquidity above you, there's liquidity below. This one is going to be a crazy one. This one is going to be crazy because when the spikes start coming, so you can see this other block, there's a break of structure here, there's a resistance here, there's a resistance here. That's the break of structure, impulsive move. The red candle before the break of structure is the other block. Nice. So now once if you want to sell here too, now what the market is going to do, it will kill the buyers here, it will kill the buyers here, it will come down. Okay, those people that are trading breakout and retest, they say okay, you go retest. If you come here, market go retest. Market will sell a little bit, deceiving them, retesting, they'll sell. Market will go back up again. Market will sell at this point, accumulate orders, sell, move up. They'll still keep selling till it hits their stop loss, and then we're waiting for another block here. So let's look for another block above this point. You can see there's no other block here right now. This one here is too much. The green candle is too much. So let's go to, but you can see highlight it. That's the other block. Still another block, but I won't be taking this type of other block because it's too much. My stop loss will be wide. So let's go to 30 minutes. Now that same zone, nothing much. I can see an aggressive move to the downside. There's a break of structure here. Aggressive move to the downside here. This one has been mitigated. I'm not using this other block because it has been mitigated. So simple. So what am I looking for? There's a break of structure here. Let's go down to the 15 minutes time frame. I need a clearer one. I need a clearer OB. OB is other block. So what do we have here? Okay, nice. Now you can see there is an other block here. Coming. Let me delete this white rectangle. Now there's another block here. Can you see? Aggressive move to the downside. You can see there's another block here, but I won't be using this. I want to be using the one at the highest price, so they will sell at highest price. You can see in break of structure. Now look at it. There's a break of structure here. Look at this resistance. Nice resistance. Markets broke it impulsively. So this is the other block before the break of structure. So simple. The green candle before the impulsive move is the break of is the other block. So I'm waiting. NZD, Euro NZD. My orders are there. You know this one now. I've set my orders because I want to enter with liquidity. So I don't need 5 minutes confirmation again for the other block. So if I want to sell, I'll be selling this one here. Okay, let's go back to the 30 minutes time frame. So I'll be selling at this point. Imagine. Nine pips sell. At least I'll be selling to their point of retest for TP1 and TP2 back to the zone. 1 to 17, 1 ratio 17. Imagine. Nice. Nice. So they'll grab liquidity, move up, rally up, kill all of them, then they'll start selling. Any questions, please? Any question? So have you gotten the concept of break of structure now, at least to some extent? Then when you keep rewatching the video, you should understand. So ERNZD, I'm waiting patiently. So trading is a game of patience. We can even take this one to this point safe, because we know 6 pips SL. Imagine 1:33. Can you see any retail strategy giving you 1:33? 1:33, 200 pips. So we know now that if the market should mitigate this order block at this point, killing the buyers here, killing the sellers, trading retest, they'll go up, accumulate sellers, because this is a resistance area, accumulate sellers, then they go up. So eating our take profits, eating our pending order for order block, they move down again. So guys, this is a very interesting topic, because most of the time you'll just be laughing, because you'll be laughing at yourself that, wow, assuming I didn't know this strategy. So this is how the market makers will be playing with my emotions. They'll be eating my stop loss and be moving in my direction. They'll eat people's stop loss here. Even see if they'll eat people's stop loss here, they still want to buy you, but they'll first sell. They'll not buy. They still want to sell you. They want to sell you, but not at where everybody's selling. Where they want to sell, which is the other block sell, then they sell. Okay. So I think that will be all for now. Let me talk about imbalance sharply. Imbalance, I said, it is when there is a lot of orders. When there's a lot of orders, can you see? A lot of orders, there's pressure. So when there's imbalance like this, markets will try to cover it back. So what you need to do is just that when you see an imbalance, maybe a news, something like this, market will try to cover it at least back to this half. So how can you get market trying to cover it back? Just look for an order block, so, around this place, something like this order block. They'll cover it back with the other block. So you can see how we're using. Can you see? Look at this imbalance. They covered it down back. So let's take a look at this one. Let's take a look at this one. What percentage am I? Okay, 1 minute to full charge. Where were we? I was explaining something, imbalance. Okay, look at this aggressive move to the upside. Break of structure here, break of structure here, break of structure here. So what's caused the break of structure? This impulsive move. So where is the red candle before this green impulsive move? It is here. So that is the other block. Can you see? Nice other block. Nice one. Waiting. Can you see how we waited? Market went up, waiting to mitigate, wow. Look at the sniper entry. Guys, just look at it. So in the point of mitigating the other block, you take your entry on 5 minutes time frame. Never forget, and you look for other block on 5 minutes time frame, set depending order with institutional key levels, then you move. So at this point, it has created liquidity already. So there's liquidity here already, like this. Can you see mad stuff? Can you see? There's liquidity here already. Immediately there's another block here. Remember, there's another block here. This second order block created a lot of buyers because people started buying already, created support. There's liquidity there already because people start buying and placing their stop loss where my dollar sign is. So people start buying, placing their stop loss where my dollar sign is. This NZD, ERNZD, don't play with it, guys. With this knowledge I've given you, at least you should be able to kill it. This one that is coming. Just look at it. No, see, this is the first thing that happened. Other block, impulsive move, created an imbalance. You use the other block to try to fill the imbalance. Doing that, it gave us a support area, creating liquidity. Now the buyers are in. The buyers are here again. Look at what happened. It took all the buyers out. Boom. took all the buyers out, and then you can see I have a white line here. It means there's an order block there on the daily time frame. No, let's go to daily so you can see the order block. So you can see how these people make smart money. It's called inner circle trading, smart money concepts. So you can see liquidity, order block, boom, we are waiting. Me, I'll just keep waiting till I strike. So guys, that will be all. I think I've covered liquidity, imbalance, order block. So just let me know if you don't have any questions. If you have any question on that block, ask again. I have time now. I can explain again on other blocks. So let me just know. Okay. Okay, let me just save this template because it's very nice. Market does the same thing, and you'll be seeing why you'll be like, why is this market eating my stop loss and going in my direction? It's because there's liquidity there. Your stop loss is where the people want to enter. So I'm waiting. 5 people left. I think that will be all for now. We've recorded for 1 hour 17 minutes. Okay. Any question? Any question? Any question? Any question? Yeah, see nice. Hey God. Hey. See nice liquidity grab. There's liquidity there. If you can't find liquidity, you are the liquidity. If you can't find liquidity, you are the liquidity. So where is another block to buy here? Let's even start from the daily time frame. Trend line here, Nibo. So see the trend line. Took all of them out without beating them. So let's start from daily. No other block on daily. 4 hours. Can you see, guys? So let's move to 1 hour. Other block for this one fast small, but this is a nice other block here for sell entry. Now there's liquidity here too. So don't stay long on this trade. When you grab liquidity here, once you sell and you see the other block and you sell, bram, close profits, it will come to this point. Then there's liquidity here soon. So this market is still going to buy. NZDCHF is still going to buy at least for the next 1 month till it grabs liquidity. So this is another block here. Imagine. So the other block is here. Guys, this is no film trick. No trend line, no nothing. No indicator. Just simple interpretation of what these people use our money to do. So there's liquidity here. There's liquidity here. So once you are selling at this point, take profit ASAP. Take profit ASAP. They are still going to buy. Remember. Just clear some things like what? Man. So let's look for other blocks. There's no even other block at this point. Nothing much. Just something like this. Let's look for that block here on the smaller time frame, 30 minutes. Because I believe this market will still buy. There's another block here. But let me use this other block. No, this one has been mitigated. So let me use this one. You can see break impulsive move, break of structure, creating retests. So I'll enter this one here. NZDCHF, man, so sweet. I'll enter this one here. I'll grab liquidity and run 5 pips SL at least to this point. 1:2, no time. Once we do that, once we see it's still going down, anyhow, delete. And once you've grabbed liquidity like that, they'll come here again, grab liquidity and start going up. They want to grab liquidity here too. They want to grab liquidity here. Just imagine. There's another block here. Aggressive move down, break of structure, impulsive move to the downside. So guys, this is smart money concepts, inner circle trading. So never forget the market makers. Let me just use my auto charts. So can you see, guys? Take profits, run, take profits, run, and then we'll swing it. Yeah, that's the final order block. Let's check if there's an order block there on the daily time frame. Okay, no daily order block, just that. No question for now. Okay, that is that about that. Liquidity imbalance. Now there's an imbalance somewhere. Let me quickly explain that. Okay, look at this aggressive move to the upside. Market will try to at least cover the aggressive move back with the use of another block. Just catch it. See this other block here, catch it ASAP. You just go to the smaller time frame, define the other block, and then we move. Look at this other block here too. Aggressive move to the downside, then retest, mitigates the other block. So just practice. I'm also watching one pair. Yes, look at this imbalance. GBPNZ. I don't like what I'm seeing here. There's liquidity below this one. I'm waiting for another block. Might be this didn't hold. No confirmation on 5 minutes. Might be this. So this is a higher price. See, no time. I should use this OB. So guys, nothing much. You get Euro JPY. There's one particular one I'm watching. EJ, man, this one I entered during London session, Asian session. So my stop loss got it. So I learned something this app. Never enter this strategy with Asian session. Stop loss was just 4 pips. Imagine 4 pips SL. So I didn't feel it. When you're trading with strategies like this, you won't even feel that you eat SL. Guys, am I communicating? You won't even feel it that I eat 4 pips SL. Oh, that's 0.10. That's $4. Man, no. No, you don't feel it. No, only if you are greedy. So I entered somewhere here, the other block. It came down, went up. So Laura Pansha never enter other block in an Asian section. That's what I learned. We move. It is my stop loss moving my direction. I knew that, okay, at least I lost because of the Asian session. Fine, no wala, we'll catch it again. No question for now. I think that'll be all for now. Peace, guys. So whenever you're sending analysis, try to send analysis to the group. Just just send. Let us see the same thing. Then that's the main purpose of the group. Everybody is seeing the same thing, trading the same thing. And if there's another update, I'll let you know. Let me stop.